Welcome to the Real Estate 401k Show. Here are your hosts, Ryan Gertis, Mike Weinstein, and Justin Frederick, helping you build a legacy of wealth through real estate. Powered by the Recon Group at West USA and the Frederick team with Fairway Mortgage. NMLS number 625918.
All right, so there's just been a lot of talk and a lot of chatter about interest rates. And it is one of the biggest things that I am getting pushback on from many of our investors, our buyers, our second home buyers. And I found this survey and I found this report that I thought it was incredibly interesting to me, because we know interest rates are a problem. It's just how deep is the problem and what are people waiting for? And before I get into some of these stats, I want to preface this with this is going to support our theory that this is the time to jump in the game. Jump in the game when there is a lack of competition. So 2/3 of 2023 buyers are waiting for mortgage rates to drop before home shopping. 30% plan to wait until rates drop below 5.5%. Justin, we don't know when that's going to be. 28% want to see rates at least below 6%.
Can I jump in right there?
Yeah.
So, here's my biggest question, and I want your guys' thoughts on it, because I talk to a lot of people about, okay, well, how high is too high, right? What's the threshold before the number is like comfortable? Why is it that everyone is coming up with 5.5%? Because
they're just throwing a number out.
I don't even prompt it.
They're just throwing a number out there. They don't. At the end of the day, most of the time, buyers are concerned about monthly payment and how much money do I got to come to closing with. That tends to be it. They look at an interest rate as a number, and if they're shopping, they've seen market rates, but at the end of the day, they're looking for monthly payment and how much cash am I bringing to closing.
What are your thoughts, Mike?
Well, I guarantee you, I didn't actually see the survey questions, and I guarantee you the survey was a multiple choice.
Fair enough.
I have to assume that choose 6%, 5.5%, 5%, 4.5%,
right? Because that's why you're getting
forth.
these large statistics.
So I guess my follow-up question on that is why do people always come to? Well, they come to me. I'm sure they come to you guys and they say, "Look, I want to buy a property, but I don't want to spend more than $400,000." What the hell does that have to do with anything? Like, if the pressure points are truly what do they have to come out of pocket with and what their monthly payment is, who gives a shit? Why wouldn't they go buy $1 million property?
I think that they come up with a plan somehow. I don't know how they're coming up with a plan, but they're
okay. But
sitting down with your spouse.
let me then throw it on us as a industry. The number one question that a typical real estate agent or realtor is going to ask a client: how much you want to spend on a home? I think it's on us. The question that we always ask is, what payment are you comfortable with? Because if I know that you're comfortable up to a $3,000 a month payment, then I can reverse engineer it. They're going to already have talked to you, Justin, so we know what the rate's going to be. And then from there, we can do the multiplication and division or whatever and come up with the home value of what they can afford.
Well, even on our application, just to touch on that point, even on our application states, what's your purchase price? How much down do you want to put? Not, tell me what you want your monthly payment to be so we can figure this out, you know?
Okay. It's just something that I wanted to bring up because I think it's something worth talking about, because if you're out there and you're considering purchasing a home, start asking better questions. You know, if you've gone on to maybe your lender's website or whatever, and you've actually used a mortgage calculator and you've gone through a pre-qualification application, then okay, then that tracks, right? But I can't tell you how many people just volunteer that information. So if you noticed, my statement was, that's not what I'm asking people. That's what people are telling me when I'm doing a pre-consult. They like to volunteer that information. So what I say to you is if you're going out there and you're kicking around the idea and you're having conversations with people, stop focusing on what the purchase price is. Start talking about what the loan conditions are and the terms and what that actually plays out to. Because who knows? You may not want a 30-year. Maybe there's new 40-year products coming out that people are using to bridge over to when rates get lower, and they're trying to they have different goals, so on and so forth. 40 years, yeah, okay, maybe not 40 years out there yet, but there's been rumblings of it, is what I'm saying. And so
It will come.
Moral of the story is that people are getting different types of loan products out there to accomplish different goals. And so start asking questions that are goal oriented.
All right, so obviously we're not going to get
Hell yeah, we
to
are.
these. Screw the stats. That's because it is. I think Ryan has hit the ball out of the ballpark on this one. And Justin, you and I just had a discussion in the hallway about it because you guys over last couple of days have had 3 people basically cancel their contracts because of interest rates. So maybe I should say this, and maybe modify Ryan's point. It's not a matter of asking us the right questions. It's a matter of asking yourself the right questions.
Yeah.
Like I still, and I know this is going to be a sensitive subject, and we get some people that make stupid comments, and I appreciate that, and we get a lot of trollers and things
I love them.
And
Yeah.
I do too. I like to have fun with them. Listen, if I'm stupid, my friends are going to call me stupid. If you're stupid, I'm going to call you stupid. Stupid is as stupid does, right? But
Sir.
I just can't imagine. Like Mariah and I are still in the market to buying investment properties. Interest rates, the higher
And we're cash flowing like crazy.
The higher the interest rate for me right now, the better the opportunity. These people
At your purchase, right.
people who are canceling their contracts because of interest rates. Let me tell you something. When rates do drop, and you're like, oh, now I'm going to get back into the game, you're going to be paying a lot more for that house. Your payment is probably going to be higher.
Well, I'm going to tell you right now,
When he gets fired up. Look at him.
99%
He's like a
chance that rates are going to drop dramatically in the next 6 months. There's the statistics show that the rates are going to go down based on how fast inflation is going down. So I've said it almost every single time that we talk on the show is date the rate, marry the home. The rate is short-lived. Stop thinking about the rate for right now. I know you got to think about it, but if you're still producing income on the property, who cares about the rate?
Or if it's a primary, you have to have a place to live.
You have to.
You have to have a place to live.
And rent's going to keep going
And you're going
up.
to still make money on the home, regardless of what the rate is.
This is how fast we're expecting rates to go down. We're expecting by the end of the summer to see mid-5s, like this sheet says. We're expecting to see mid-5s. We're expecting by the end of first quarter 2024 to see mid-4s in interest rates.
Ryan, am I...
But do you think you're going to – I'm sorry to interrupt you. Do you think you're going to be able to get a house at the price that it is today?
No.
At the end of first quarter 2024? No, you're going to be competing with 40 people to get the house. So VA, FHA, you're out. Throw yourselves out of the market. Right now, you could buy. 6 months down the road, you're out. You're out.
Okay. Am I oversimplifying this? Here's the 2 questions, Ryan. Okay, Ryan and Christine, I'm showing you homes. You like this home. Ryan, Christine, do you like this home?
Sure, love it.
Love the home. Can you afford the payment?
Yes.
Okay, let's go. I don't care about the rate.
I wish it was that.
Well, because like right now, the people I'm going to be having conversations with that say, "Well, I'm too scared," or if we go back to these stats over here, of 62% of respondents find it challenging to keep up with mortgage rate trends and news. I'm going to be refinancing with about 30% equity in my home at the same rate that you're buying with 5%.
I know.
So, like, okay, it sucks. Sometimes it's hard, and trust me, the first 2 are the worst. But once you get over that mental hump and just know that, all right, well, guess what? You're not eating out as much that month, or maybe this year you're not taking a 2-week vacation, you're taking a 1 week. Like, I get it, because I would challenge the 62% over here. How many of them are, going out all the time? they'll walk into a car dealership and buy a car after 3 hours of shopping. These are the types of folks that I get it. The mortgage rates and trends and whatnot, they are difficult to keep up with.
All right, walk me through, Justin, the difference between a home and a car, and work with me on this. Here's what I know about a home and a car. You need both.
Yes.
You need a mode of transportation, typically.
Yeah.
Okay. And you need a roof over your head. But I will cry, and when I say me, not me. I'm just putting myself in our followers' shoes. We will cry and bitch and complain. Oh, I don't want a 6.5% interest rate on a home, a 7% interest rate on a home. That's just too much. So I'm going to throw away this money and I'm just going to rent. What did you say was the average interest rate for a car, an auto loan?
So on April 28th, Barry Habib told me that the average auto loan right now is 11%. Did you know 17% of people have over $1,000 payment on an auto loan that depreciates like crazy?
Depreciates.
And we have a house at 6.5, and people are complaining about it. When you're paying over $1,000 for a car that you're going to have, what's the average time on a car? But these
5
we're
years,
talking
5
about
to 7 years,
6-7 year car loans too. I mean, this, it's mind blowing.
Okay, and then Ryan, what's the typical interest rate on a credit card?
You can get some at 12, but they're mostly in the 20s.
20s. And Justin, in your world, what would you say on a typical day a borrower has on credit card debt?
Oh, I would say on average you probably see about 20 to 25,000, and that's on average because a lot of people have zero, but then there's the other side of the spectrum where it's an incredible amount of debt.
How many things do you think that they've purchased with their credit card are appreciation assets?
Zero.
Helping
Zero.
them build wealth.
I'm going to go with zero.
Yeah. Zero. And most of them don't have anything to show for the amount of debt that they have on those credit cards that they're and you could get credit cards at 12%. I don't see them much at 12% anymore. I think the rolling average is getting like up to 28% right now.
They're usually collateralized, but yeah.
Which is an insane.
All right. Well, the goal of the matter is to build that strategy. Don't let interest rates be the only determining factor. There are so many other numbers that you have to take into consideration, especially the other ways that you actually make money on a piece of real estate. We'd love to have that dialogue. We'd love to have that conversation with you. All you got to do is text the word wealth to 623-AZ-RECON. Again, just text the word wealth to 623-AZ-RECON.
Thank you for joining us on the Real Estate 401k Show. If you want more information on how to build wealth, click on the link or text us at 623-297-3266. That's 623-AZ-RECON.